Hello everyone, Andrew here, and I want to talk to you today about should I buy a home? Is now a good time to buy a home? So interest rates have been going up, we all know that, and they're at about 6.75% today, and that's really gone up in the last year or so. We actually had historic low interest rates a couple of years ago, and now they're getting higher, and people are saying, hey, should I still buy a home? And I say yes, you should still buy a home, and I'm going to give you a couple of reasons for that. When you get a 30-year fixed rate mortgage, your payment stays the same through that entire 30 years. So on day one, your payment stays the same as it's going to be on the 30th year of that mortgage. So if you're renting right now, do you think your rent's going to be the same today as it is 30 years from now? Rents actually are going to go up as inflation goes up, whereas with a 30-year fixed rate mortgage, your payment is going to stay the same through that entire thing. And remember, rents are going up as inflation's going up. I always say, you're always paying a mortgage, whether it's yours or someone else's. But as inflation goes up, your rents are going to continue to go up. And also, every month that you are paying on your home, you're also building some equity. In the beginning, it's not as much. It's more interest loaded in the front of the loan. But as the longer you maintain that loan, the more you're building up equity every single month. Also, you're going to have appreciation in the home, and I'm going to give you examples of all these numbers, but there's going to be appreciation in the home, and you're going to get, in most states, you're going to get a mortgage interest deduction. So the amount that you're paying in the mortgage, the interest on that mortgage, you can get a tax deduction for it, and that can be pretty significant. So those three things alone are going to tell you that, yes, you should still buy a home, even though interest rates have gone up. And I'm going to give you... Okay, so as I was saying, with a fixed rate mortgage, your payment stays the same on day one as it does on the 30th year of that mortgage. So, for example, if you were to get a $300,000 loan and you're going to put down 20%, so you're going to put down $60,000, you're going to be borrowing $240,000. Now, if you get that at 6.75%, which is about today's interest rates, okay, your mortgage payment is going to be about $1,889, okay? That's your mortgage interest. So let's say right now you're paying a similar amount in rent, okay? So let's just say you're paying $1,900, we'll just round that off, per month. Okay? Now, of that, this is also including your taxes and homeowners insurance. I figured out in this. Your principal and interest on this loan is going to be $1,556. Okay? Now, let's say, for example, that you were to live in this home or maintain this mortgage, say the same $240,000 mortgage for 20 years. I'm going to use 20 years as an example. So let's say you're 40 now, you buy a home, you're going to stay there until you're 60. Okay? So on your 60th, when you're 60, okay, at that time, you're still going to be paying $1,889 per month. What do you think 20 years from now your rent's going to be, okay? We have no idea, but I look back and I think to myself, 20 years ago when I was renting, significantly less than what I would pay for what that same thing would be today. So 20 years from now, your rent's going to be significantly higher than $1,900 per month. Whereas because you locked in on that interest rates, you're still going to be paying this same amount per month. The other part of that is, too, that I'm telling people, and I'm not even figuring this into my figures, but even if you pay that 6.75% today, those interest rates will come back down. They're going high. They're going to go a little bit higher probably. But then when the inflation is under control, these interest rates should come back down. And we might come back down to a 4.75%. If you were to refinance at 4.75%, then your interest and payments actually almost drop by almost over $300. If you were to come down at a 4.5% interest rate. So there, your monthly payment has actually gone down by $300. Do you think your rent payment is ever going to go down? If your landlord refinances that apartment building you're in or the house that you're in, do you think he's going to cut your rent because he refinanced it? No, if anything, your rents are going to go up. So right there, it's still a really good idea to buy a home versus renting a home. But also, not only that, this home is going to appreciate in value. Now, the average in the last 20 years, the average home has appreciated in value by about 4% each year. I figured at 3% each year because in the next couple of years, we may see a little bit of depreciation because homes are going for maybe a little more than they should right now. So you're going to see some depreciation. But I figured if you were to go at a 3% appreciation per year, in 20 years from now, this home that you bought for $300,000 is now going to be worth $541,000 if you get 3% per year on this. So now you're at $541,000. Also, what's left on your loan is going to be about $110,000. So you've actually increased the value, your net worth at the end of the day, you've increased it by $357,000 by buying the home, building the equity up, and accounting for the appreciations in that home. And that is if you stayed at that 6.75%. This number is going to be even higher if you had refinanced, didn't pull the cash out, but refinanced and actually had a lower payment on that. At the end of the day, when you're paying rent, again, your rent's only going up. It's not going to go down, and this money is just gone. It's just gone. There's no equity built up at all when you're renting. What you've done is you've built up equity for the whoever did own that home or apartment that you're in. So keep that in mind when you're thinking about, should I buy a home? Because a lot of home buyers, unfortunately, are getting a little scared off because these interest rates have gone up, and they say, I don't want to pay that interest rate right now. But because of, again, the equity that you're going to build up, the mortgage interest deduction that you can take off your taxes, and also the equity that you're going to build in that home, it's still a good idea to buy your home, because when you buy a home, you're building wealth for the future. When you're renting, unfortunately, you're paying someone else's mortgage. So yes, it's still a good time to buy, even though those interest rates have gone up, and I believe they're going to continue to go up. Don't let that scare you off from buying a home, because it's still going to be one of the best investments you can make. Again, because of the equity at the end of the day of what you're going to have. And this is off of 20 years. Most people own their home about 10 years, or some people do own it all the way to the end of that 30-year mortgage. But that's just if you looked at what 20 years from now we're going to be. I look at it, if you look at 20 years ago, again, what I was paying for rent at that time versus being a homeowner, where I would be today. And I look at it now, if you're paying rent, and 20 years from now, where will you be if you were to continue to pay rent versus buying a home right now? So yes, I think it's a great idea to still buy a home today. Thank you.